Don Mazzella here again for Small Business Digest. And it used to be that healthcare was the number one issue facing small business. Now, according to our studies, it's third, but it's still very important. And we have with us today Edmundo Gonzalez. He's got a very interesting company and some very interesting ideas, and we'll get into him in a moment. But first, we're going to ask him a little bit about himself personally, then a little bit about his company, and finally a website. Edmundo, it's all yours.
Thank you so much for having me. It's such a pleasure to be with you today. So just a word of introduction on myself. So I'm an entrepreneur and an investor. I've been doing this for about 20 years, basically founding and building technology companies like Marpai, taking them to scale, building great teams, both in the healthcare industry and in other industries as well. But the theme across the last 20 years of my experience has really been in building tech companies at scale. And that's exactly what we've done here at Marpai Health. We are a technology company focused on the healthcare space and very specifically on the health plan administration space. So we work with clients across the country that have chosen to self-insure their health plans. What does that mean? You know, down in the United States, about half of us get our healthcare from our job. So let's say that you have a small business of say 100 or 200 employees. Well, you have a choice. You can buy health insurance from Blue Cross or United or one of the big players. And we all know how that works. It's a fixed price per employee per month. And that works great. You have access to your providers. It's also a very expensive way to provide healthcare to your employees. So we work on the other side of the fence, if you will, for all of those companies that have decided not to buy traditional insurance, but rather to self-insure. This includes small businesses, large businesses as well as a lot of government agencies like school districts, towns, municipalities. What we do is run all of those healthcare benefits on behalf of our clients. So we put everything together so that they can access providers like doctors, hospitals, get their drug benefits as well, so they can go to CVS and get their prescription drugs. That's what we do at Marpai Health.
So, Edmundo, spell it out. Spell out your website.
Oh, yes. So we are at www.marpaihealth.com, and Marpai is MARPAI health.com.
Okay. But now let's go into this in detail. Small business, when they see the word self-insured, get run for the hills because according to our studies, they're afraid of it because of they're worried that somebody is going to have a catastrophic illness and that's going to kill. So I'm going to ask you to kind of go through the process of how a self-insured program works.
Absolutely, I'd love to. So, Don, you know that a lot of the growth in our space, in the self-insured space, is actually coming from small businesses, not from your large, huge businesses, the Fortune 1000. Those are already self-insured. But more and more smaller businesses of say 50 employees, 100 employees, 150 employees are coming into the side of self-insurance because the rates of a fully insured program have only known one direction, and that's up, up, and up. So we have proven to be an alternative. Now, how does it really work for, say, a business with 100 employees? Well, We of course understand.
Edmundo, I'm gonna
Please.
interrupt you for a minute because most of our audience is 50 and below. So
Okay.
we start with that point and kind of use that as an example.
Sure, sure. So let's say even 50 or 35 or 25 employees. Those businesses, by and large, do not have the risk tolerance or the capital to withstand a very catastrophic event. Let's say again that one of the employees has a very rare form of cancer and needs a specialized treatment that's going to cost $1 million. Well, that small business, if it were really, truly, completely self-insured, would go bankrupt, right? It's just not tenable. You can't do that. So what happens? In 100% of cases, all of my clients have a stop loss insurance. Now, those stop loss insurance policies have gone down to basically stop the loss or the incidence of catastrophic loss way down. How does this work? Really, it's two policies that cap the risk for the company. One is specific, meaning if an employee reaches, say, costs or spending of, say, $25,000, that insurance is going to take the dollars above 25,000 and insure it away. That's one very important level of insurance. The other layer that we place is called aggregate insurance. That means that, say, no one reached that limit of $25,000, but you had a lot of sick, not catastrophically sick, but really sick people, and they all reached $23,000, and there were dozens of them. Well, then your overall spending would be well above what you planned. So aggregate just means that an employer group, a small business, is able to cap what they will spend on healthcare at the max level. So again, you're self-insured, but only to a point. Beyond that point, you are able to insure that risk away. Now, a very important point there. So what do? We're managing all of these claims. We're managing all of the healthcare benefits on behalf of the employer group. But we do a lot more than that. Our systems, our technology is able to predict costly events in healthcare. What I mean by that is that we're able to look at a population of employees and predict who's on a journey to have a hospitalization or who's on a journey to have a very high cost surgery. By knowing that, we work with those members to do something about it. This is really preemptive and proactive care in practice. Now, we know that proactive care matters because it keeps costs lower and obviously increases health outcomes, meaning people are just healthier if you catch things early on. That's what we do, and that's what helps the overall cost of healthcare for our groups go down. It's one very important difference of Marpai vis-a-vis other competitors out there.
Edmundo, let me stop you right there and let's talk about that because that's what really interests me. So how do you apply this AI? Do you do surveys? Do you have employees take the physicals? Go into a little bit of detail on that, please.
Yes, I'd love to. So no, first and foremost, since we are capturing all of the health claim data out there, we are able to make predictions based on that flow of claims that we're capturing just incidentally as we go about our business. Now, our algorithms, meaning our AI, has learned how to spot things based on a massive research universe that we own and we have. So we have built that over years. That has tens of millions of people and well over 100 million claims along with other data. So then as, let's say I was a member of the plan. So I go to CVS and get the 5th script of a prescription drug. Now that's one point of data that happens every day. There's nothing special about that. But that event is mapped with my history of claims, essentially my medical history, the fact that I'm male, the fact that I live in this zip code. And that is then compared to our whole research library of tens of millions of people. And in many cases, in most cases actually, there's nothing to do, right? It's just normal consumption of healthcare. In some cases, that will match a pattern that is detected in our research universe, where our algorithm will say, you know what, there's another 10,000 people who had this same health journey, and they ended up in the hospital within 6 months. So let's get that member of our plan to a doctor. Let's have physicals, let's have labs. Often done, a maintenance drug that may cost $50 a month may keep that member out of the ER in 6 months. Now that ER visit obviously has tremendous cost in terms of human wellness. It also has tremendous cost in terms of the plan, the payment of the plan, because that ER visit may be $10,000 again versus a maintenance drug that may be $50 a month. That's what we do. We're keeping people from these costly events by having very proactive intervention into their health journey.
Okay, and I agree with you, but what about the person who never gets a pill, never goes to the doctor, and then ends up with advanced cancer?
Yes.
It's surprising. In a recent survey I saw, 7% of Americans have not seen a doctor in 5 years.
Yes, we have a similar experience. You know, in some years, some of our employer groups will have populations where, say, 40% of the population has 0 claims. That's not a good thing. It's not a good thing because that means that 40% of people really didn't have a physical. They didn't have any, visit with the healthcare industry. That's not good. We have, along with all of our prediction, we also have a very comprehensive plan around gaps in care. A gap in care is basically our knowledge that you are missing something. For example, if you're female, you should have a mammogram with certain frequency. If you're male above 40 or 45, you should have a colonoscopy. These events are the events that are routine, simple, relatively very low cost, and can save your life, literally, but also save the plan tens of thousands of dollars in healthcare. This is what proactive and preventative medicine looks like. Are we going to get everyone to participate and to act? Probably not, Don. But if we have to start somewhere, because the healthcare system cannot sustain this level of expense. So we start with people that want to engage. And obviously, as we go and we educate our member groups, we expect higher and higher participation. We've had pretty good success, by the way, in getting people to take an action once we produce an alert or an AI-driven prediction.
Well, I have 2 questions. The first one deals with the fact that the younger people think they're immortal, never go to a doctor, never do anything, and increasingly they're a larger part of the population. What do you do in the case where you have these tech companies with all these young kids running around.
Well, actually, I slightly disagree there because I think younger people are used to consuming healthcare maybe differently. So, look, as I walk around, I'm collecting healthcare data. All of my steps are being collected on the health app of my iPhone, right? So, there's a tremendous amount of attention here on wellness, on look at all of these wellness programs, gym programs, all of this that has gone online. I think the consumption patterns are most certainly different in the younger population, but we've seen a tremendous spike, unbelievable spike in usage in terms of telehealth, not only for routine visits, but also in the mental health side as well. This is, in many ways, has been driven by the pandemic because we were locked down. But in many, many cases, I think the younger generations are just consuming healthcare differently. I'm not quite convinced that they're consuming less of it, but it does look different. And you know what? In many cases, it's different and it's lower cost. Obviously, telehealth costs only a fraction of in-person health.
Well, the other question, I guess, is more. There's a large illegal population in the United States, and um, where do they go for health care? And um, are are you finding that they're somehow slipping into the system? And because you can't match the Social Security with the illegal immigrant or anything else. Uh, and I assume that you still use the Social Security as as the key to record keeping.
Well, first and foremost, so at Marpai, we only deal with commercial plans, so meaning small business plans. And no, I mean, all of our members would have a unique ID that we would give to those members. But yeah, 100% of our populations are, small, medium-sized businesses or government agencies like school districts. We actually have a huge practice in school districts. So that's who we cover. With respect to undocumented people's getting healthcare, there's a lot of frontline efforts, including FQHCs, federally qualified clinics in many areas that do service, obviously, anyone that walks in the door. And again, the issue there is that you're providing healthcare when a person is sick. That is late. Of course, you provide healthcare when someone's sick, but the right time to start healthcare is proactively. That's what really saves cost in the long term.
Okay, your website again for people who want to know more?
Oh, absolutely. It is www.marpaihealth.com, and Marpai is MARPAI health.com.
Okay. Have you thought, or are there ways for 4 or 5 companies in the same industry to come together and plans? Can they do it within your group, or does each company have to stand alone?
Well, as a healthcare payer, we're bringing together a whole ecosystem of companies. So right now, we actually work with Aetna and with Cigna, companies you obviously may know of. These are the largest insurers in the world. Now with us, they're not acting as insurance companies per se, but rather they let us rent their entire national network. What it means for a small business is that those employees that you may have can access any doctor that takes Aetna, which is about 93% of all doctors in America, or say any doctor that that takes Cigna. What it also means is that the discounts that have been negotiated between Aetna and those providers also accrue to members and employers of our plans. That's a very big thing. But Don, we bring together an entire ecosystem because we can't do everything. So we work right now with a whole series of excellent vendors. We have a preferred vendor program where, let's say you own a telehealth program or a mental health program or some other kind of wellness program. We want you to integrate with us and for our members and our employer groups to have access to that, because it's really an ecosystem of health that our members want. And that's what we bring together. We're kind of the center, since we manage all of the claims, the money flow, right, for between our clients and providers. But we bring this entire ecosystem about, and we're very happy about that. It's working. You know, in many cases, our members access these vendors to complete their healthcare.
Well, let's talk about what every small business has. How much money are you saving your way versus if they went with a Blue Shield or a Blue Cross?
In some cases, we can save 40 to 50% if this is structured right and implemented correctly. Off the bat, just moving fully funded to self-funded, you should expect 20%, kind of immediately. The work really, if the work is done right, you'll expect to save a lot more. Again, well over a third in doing this in a self-funded environment. And that's what we do for our clients. Now, remember, not every self-insured journey is the same. In other words, if you're partnering as a small business with a third-party administrator like us, they may pay your claims, and that's good. They may do an awesome job about that. I think as a small business, we're one of them, by the way, as well. So I have 129 employees. I'm also a small business, but you have to also look at the population health. You have to look at intervening and managing those high cost claims before they become high cost claims. This is a lot. There's a lot of science. There's a lot of technology involved in this. We're one of the first to really bring all of the power of this technology in a very accessible way, in a way that's kind of sitting in the background, but helping your members, in other words, your employees as a small business, be healthier, get in front of those very costly events. That's good for them. It's good for their health. But obviously, it's good for the business because it's bringing those ever-rising healthcare costs down. That's the bottom line.
Okay. Your website, one more time for our audience.
Thank you for that. Yes, it's www.marpaihealth.com, and Marpai is MARPAI health.com.
Well, Amanda, let me see if I understand this in simple languages. What you're in effect saying is, a self plan. On the top is you buy insurance to make sure that you have some limit, whether it's 25,000, 100,000. So besides your premium cost, let's say it's 100,000. The maximum you can have in terms of claims is 100,000. So you, in effect, are committing $200,000 of your budget to your health care. Am I hearing that correctly?
Yes, what you're saying, Don, is exactly right. So basically, as a self-insured small business, there are ways for us to cap your loss. So let's say that your budget on the fully funded side, say if you went to Blue Cross or Cigna or Aetna, you were spending $100,000. You can actually make that a cap, right? That is possible in self-insured, meaning that if you spend less, you're gonna save money. spend less, meaning that your actual claims costs were less. Of course, you're going to save money, but we're able to make that your limit based on stop loss insurance. So yes, you are self-insured, but only up to a point. There's no scenario here where you just lose so much money because you had, say, a very sick employee or employees. That's not going to happen because we have a layer of protection for you, underwritten, by the way, by some of the largest insurance companies in the country, right? So that stop loss is what's really making self-insurance possible for small businesses. This used to be only possible for very large businesses. Of course, if you're, Coca-Cola or General Motors, well, of course you self-insure. But what about, a small business of 50 people or of 25 people? That wasn't possible. It is now, because we can place these stop loss layers that protect you from catastrophic loss.
Well, on that note, Edmundo, we say thank you very much for me, an illuminating time. The world sure has changed over the last few years. Would you like to
Absolutely.
leave any last thoughts for our audience?
No, just look, it's trying times, right? With inflation and everything. I think many small businesses are definitely looking at self-insurance, and I just invite you to learn more. We are here to serve small businesses. We are one ourselves. So thank you so much for the opportunity, Don. I thoroughly enjoyed it. Thank you.
No, thank you for coming on board. Thank you.